When we met, Mr. Book, we had a conversation about a very significant series of warnings that are out there that I put into this general category. Climate risk clobbers insurance markets. When insurance markets suffer, that clobbers mortgage markets. When mortgage markets suffer, that clobbers property values. When property values crash, that leads to widespread economic distress, what economists would call systemic risk. What I'd like all of you to pay attention to is some of the places where these warnings are coming from. They include Fed Chair Powell warning the Senate Banking Committee that in 10 to 15 years, I'm quoting him here, it will be impossible to get insurance or a mortgage in certain coastal and fire-prone regions of the country. A board member of the biggest insurance company in the world, Allianz, Gunter Tallinger, warned that climate risk is threatening the very underpinnings of the insurance model, and when that fails, that cascades into real estate. I'm not familiar, unlike Senator Warner, with high finance, but he also warned that insurance failure would compromise significant financial deals in which an insurance component is what holds the deal together. The U.S. president of Aon testified before the Budget Committee. Climate risk is a global systemic risk, just as the U.S. economy was overexposed to mortgage risk in 2008. The economy today is overexposed to climate risk. Dr. Piketty, the former chief economist at Freddie Mac, was the first mortgage guy to talk about this. He described the same cascade that I described and said, you look at the housing crisis of 2007 to 8, it was a long time before property values came back, but they did come back. This is a different type of dynamic where property values are probably physically not able to come back. And so this is equity that's lost forever. It's extremely difficult to estimate nationally. I'm not sure I have enough zeros to do it. The Mortgage Bankers Association, not exactly a green group, has stated that chronic physical risk associated with climate change may exceed the capacity of insurance and government assistance to sustain some areas. The Economist magazine warned of a $25 trillion hit to global real estate markets looming, saying, if the size of the risk suddenly sinks in and borrowers and lenders alike realize the collateral underpinning so many transactions is not worth as much as they thought, a wave of repricing will reverberate through financial markets. Climate change, in short, could prompt the next global property crash. The International Financial Stability Board had put out a similar warning to the international banking community, warning that the climate risk cascade risks putting bank solvency at stake. Clearly, if collateral value is going to crash, LTV ratios are affected and solvency is affected as well. I commend that report to you. It is heavy going, but it is a pretty dire warning. I'd add that it's not just them. We had testimony from the former risk manager of Goldman Sachs about this economic risk. We had testimony from the former head of the Bank of England, now the Prime Minister of Canada. And we had testimony in the Budget Committee from Nobel Prize-winning economist Joseph Stiglitz. So that's a pretty broad array of warnings. I'm afraid we've gone beyond warnings in Florida, that the climate risk in Florida is now so significant that Florida's insurance system is compromised and is not resilient enough to sustain any significant claims pressure. The result of that is that mortgages are increasingly hard to get in Florida. They have to go to Fannie and Freddie. No bank wants to hold a Florida mortgage in Florida. To get to Fannie and Freddie, they have to have rated insurance. I urge you to take a look at Demotech. Demotech. It's the name of the company that's providing most of the ratings in Florida. It has given A ratings to pop-up insurance companies that have then gone bust when they're presented with claims. If Demotech is a failure, then Florida mortgages can't get into Fannie and Freddie any longer. and you have a real, sudden housing emergency on your hands in Florida. And finally, the last stage of property value loss that happens when mortgages become systemically unavailable. Florida's leading the country right now in property value loss. So please take that to heart. Treasury has an insurance department. Ask them the right questions and pay attention.